Welcome back to The Explainer. Today, we are literally taking a magnifying glass to a totally fascinating case study. We're going to reverse engineer the highly successful formula behind a top-tier trading channel known as Extreme Trader. We really want to uncover exactly how they managed to capture so much attention and, more importantly, build massive viewer loyalty. Let's dive right in. 1,760 pips of profit. Sniper entries. Zero drawdown. I mean, wow. Notice the sheer confidence of that quote, taken straight from the source material. Imagine clicking on a piece of content and within seconds hearing that exact phrase. Boom. Right out of the gate, it's a high-octane, performance-driven hook. The creator's relying heavily on what we call proof of work. They immediately flash a winning trade, grabbing your attention by promising that what you're about to see isn't just theory. It has a proven, highly lucrative track record. So how exactly do they structure this success? Well, here is our roadmap for today. 1. Targeting the gold trading niche. 2. Crafting high-impact titles. 3. The script formula. 4. Delivering actionable signals. And finally, 5. Trust through extreme transparency.
All right, kicking things off with Section 1, targeting the gold trading niche.
You know, every successful content strategy needs a rock-solid foundation. And this creator, they don't just talk about the broad stock market or throw generic financial advice at the wall to see what sticks. No way. They laser in on high-stakes gold trading analysis, specifically the XAUUSD pair. And here's the absolute crucial point, their target audience. They aren't going after casual long-term investors. They're targeting retail traders who are actively searching for specific, actionable signals. By skipping the broad advice entirely, they capture an audience that is literally starving for exact entry and exit points. It's a highly targeted, highly motivated crowd. Moving right along to Section 2, crafting high-impact video titles. So how do they reliably secure that initial click every single time they post? Well, it boils down to a super strict packaging strategy with 4 mandatory elements that make their titles highly searchable and, honestly, almost impossible to ignore. First up, visual cues. They use bold emojis like a bright green square just to visually pop in a crowded feed. Second, asset in action. They tell you exactly what the content is about right away, like gold XAUUSD analysis. Third is something called a price magnet. And fourth, time sensitivity. They add specific dates like 6 to 8 May to create this intense sense of urgency. It basically tells the viewer, hey, you need to consume this right now or you're going to miss out. Let's actually zoom in on that third element for a second. The price magnet is a bold, highly specific price target followed immediately by a question mark. For example, gold to 48.60? By pairing a very specific high-stakes number with a question, it creates this massive curiosity gap. You simply have to click to find out if the market is actually going to hit that number. It's an absolute masterclass in driving click-through rates. Okay, Section 3, the Extreme Trader Script Formula. Once they've got your click, they don't just turn on the microphone and start rambling. No, they follow an exact, replicable flow. Step 1 is the credibility hook. That's the boasting we talked about earlier. Step 2 is the humility pivot. Step 3 is Telegram integration, which acts to seamlessly move the audience into their private community. Step 4 is the technical deep dive to really prove their expertise. Step 5 is the big payoff, the actionable signal. And they wrap it all up with Step 6, the risk warning. This highly structured flow ensures that every single piece of content delivers exactly what the viewer expects efficiently and effectively. Now, I really want to highlight the transition between steps 1 and 2 because it's actually, scratch that, it's not just a good transition, it is absolute psychological genius. They start with a credibility hook, boasting about sniper entries and zero drawdown to grab you. But immediately after, they execute a humility pivot. They balance that massive boast by suddenly becoming very honest, very human about market volatility. They might admit a recent move was unusual or even say they got a little lucky with market momentum. By pivoting instantly from supreme confidence to grounded humility, they build profound trust incredibly fast. It makes them seem just so genuine. That brings us to Section 4, delivering actionable trading signals. To actually deliver on those massive claims, they have to provide immense technical value. They don't just guess, they use specific, reliable tools. They identify market rejections and expected pullbacks. They plot specific Fibonacci retracement levels, usually keeping an eye on the 38.2% and 23.6% marks. They draw trend lines for support and resistance. But here is the real magic ingredient. They always explain the why. They don't just draw a line on a chart. They explain that it's a real level of support or an opening candle. This perfectly balances professional technical expertise with accessible educational explanations that really empower the viewer. And all of that technical analysis culminates in the anatomy of an actionable signal. This breaks down the exact data structure that viewers are tuning in specifically to see. They provide an exact entry point. They provide a stop loss, which is the invalidation level where the trade basically goes bad. They provide the profit target for maximum gain. And they explicitly state the risk to reward ratio. For instance, risking 770 pips for massive 2200 pip reward. I mean, that's the whole shebang right there. It is a complete done-for-you package. Everything you need to execute the trade is laid out clearly and concisely. But, and this is super important to their formula, they always include a massive disclaimer. External news and geopolitical events, think wars or massive economic shifts, can completely ruin the signal and cause maximum drawdown. The script formula strictly mandates explaining these external risks and invalidation levels. Why? Because it protects the creator's long-term credibility. If a trade fails because of some crazy breaking news, well, the creator already warned the audience, right? It shifts the blame from their technical analysis over to unpredictable world events, keeping their reputation completely intact. Which leads us perfectly into our final section, Section 5, Trust Through Extreme Transparency. Just listen to this quote for a second. The next one might fail. Don't be overwhelmed with profits. Think about how wild that is for a channel built on boasting about massive wins. But this perfectly captures the confident yet highly cautious tone that defines their entire brand. While they are clearly really proud of providing excellent signals, they are constantly resetting viewer expectations just to keep them grounded and realistic. You see, this extreme transparency about potential drawdowns is totally calculated. It elevates the creator from just being another anonymous signal provider on the internet to a trusted mentor figure. They literally speak to the audience like a friend who's just trying to protect their wallet. This calculated vulnerability is the ultimate tool for community retention. It is exactly why viewers trust them enough to engage deeply and follow their calls to action completely off-platform.
So, as we wrap up this explainer, I want to leave you with a bit of a challenge. How can you apply extreme transparency to build a deeply loyal community in your own content? You don't have to be a high-stakes gold trader to use this blueprint, for sure. Whether you're teaching coding, explaining historical events, or building a brand, combining a high-performance hook with deep technical value and radical humility is a proven, highly structured formula for success. Think about how you can incorporate these lessons into your own strategy. Thanks so much for joining me on this deep dive, and I'll catch you on the next